tech stocks did their usual job, and they just defaulted back to the market trend on buy the dip. Wasn't anything in particular in the news about it, to be brutally honest. It was just really I would say the system, algorithmic systems essentially just defaulting back to the trend, really. And there was a fair bit of negativity running into the session. We had, I think the Kospi was actually had a market halt. It was down 6.5%. I think the Nikkei was down 5%. But in the context of things, if you have a look at the Nikkei, it's up 73% since the April lows. So, a 5% pullback's not exactly, a reason to be having tears. The Aussie does not look great on the technicals. We're now a strong sell territory for the hourly, the daily, and we're neutral in the weekly, which is fairly horrible. So, I'm a little bit concerned there about the ASX. We do have a few of these daily signals weakening a touch. Just despite the fact we had that bounce back last night. I mean, the Dow jumped 0.5%, the S&P was up 0.36%, the Nasdaq was up 0.72%, the Russell was up 1.5%. But look, we've only got buy signals now on the technical dailies for the US. It's the first time they haven't been a strong buy, for months probably, actually. So, there is starting to be fewer and fewer technical signals supporting that momentum. So might be interesting to see how strongly the dip is bought. But we're down 1% in the futures yesterday at midday in the Nasdaq, and we've ended up. So that's nearly a 2% recovery from yesterday's midday lows, and about a 1% recovery for the Nasdaq. Basically, when we closed yesterday at 4 o'clock. As you can see here, it was probably more general bounce back in the broader market. Look, again, there wasn't much of a reason why. I mean, there was upbeat ADP employment data, but ADP employment data is not, there's correlations, but I think the market's just, the only reason we're looking at it is because we're not getting any payrolls data and data out of the Bureau of Labour and Statistics. And we won't this month coming either. So we're going to have at least a 2-month black hole of data. Fingers crossed they're both not negative, because I think, adding up 2 months of extremely negative or extremely positive data is going to cause a really big knee-jerk reaction in the market. But yeah, we've also got other issues happening in the US as well. I believe they're shutting down 10% of the US airspace. We are now in the longest government shutdown in history in the US. If it continues much further, because air traffic controllers are employed by the FAA, which is a government organisation, they potentially could shut down half of the US airspace, basically travel industry alone. And the airline industry is looking at staring down the barrel of $4 billion worth of costs, lost revenue and lost ticket sales, etc. So, add to that, the last government shutdown that was $34 billion cost the economy $12 billion, supposedly. I mean, you just add to that, the longer this goes on, the worse it's going to get. There was also Trump's IEEPA tariffs. They're going on trial. Where the Supreme Court began hearing arguments over the legality of these. He's used a law from 1977 with executive power. No other president's ever used them. But look, I mean, probably no other president's quite had the ego either. So there's a lot of things that he has done, like the ability to trade his personal account, not put his assets in a blind trust, that every president before him's done, and then he's not done. So there's a lot of a lot of firsts. We've got a new mayor in New York. Whichever side of the aisle you lean, essentially, him and Trump do not get along. So just expect the world's, America's biggest city, to have a massive blue with Trump. He's threatening on pulling funding. So there's just more uncertainty there. So whatever your political leaning, they basically, that was New York is essentially giving the middle finger to Trump by electing, the furthest thing away from him. So that, which, when Trump's again not doing things that other presidents have never done and walking in military troops and the National Guard into some cities, it's probably not the best. But it doesn't seem to matter for the tech stocks. They all bounce back. Nvidia did drift, but I think that probably would have been on the back of that Chinese announcement last night that government-sponsored data centers will not use non-Chinese made chips. So they're basically, the AI chips have to be domestic, and Trump obviously saying they're not going to sell Blackwells into China as well. I think that they're two fairly large signals without actually spelling it out that Nvidia is not going to have much luck selling into China. So that which is a $50 billion a year market, but overall, Tesla bounced back today. I think there was a few more announcements on that AGM, which is happening tomorrow on Elon's pay package. It looks like it'll probably get through. So it bounced a little bit as well. AMD bounced back from it getting belted. And I would imagine, where's Palantir? I don't think Palantir necessarily bounced back too much last night, but yeah, they're. It was very interesting to see how poor the price action was as well. So ARM Holdings, they were up 4%. They topped quarterly earnings expectations, offered upbeat guidance, robust licensing activity and royalty gains. Pinterest got absolutely flogged, down 22%. I don't know, because it's Pinterest. It's like a poor version of Facebook that old people don't even use anymore. McDonald's was up 2%. Restaurants better than expected, same-store sales growth. Novo Nordisk, I think it was down 1%, despite beating estimates, lifting forecasts, etc. Just couldn't get going. And Humana, the insurer, reported lower third quarter profit and slashed its full year earnings guidance. Medical costs continue to rise. So yeah, and what we'll have is not really much for the rest of the week. Just Constellation might be interesting. And then we have AstraZeneca in Europe tonight as well. Bank of England decision tonight. But overall, I don't really see much happening, particularly in the next few days. We obviously had that. I think the market will have to settle and pick a direction. It is increasingly finding it harder to find catalysts to rally, albeit that it's not necessarily going down either. There were big posts yesterday. SoftBank dropping 22% in Japan, which is one of the biggest funders of AI, and that was just part of that broader index fall as well in the Asian session. The weakness, and Jonathan Takadena from our team brought this up, is like Asia's been super weak, particularly on the opens around that 11 o'clock to midday area. So it'd probably be they're fairly interesting periods to potentially watch, because Asia normally just follows the US, where it's kind of doing its own thing at the moment. We saw a bounce in gold, silver, copper, platinum overnight, over the course of 24 hours. Lithium and uranium they stabilised. They're up slightly. Bitcoin rallied back 3.5%. But yeah, and currencies were largely unchanged. So overall, this lockdown keeps dragging out, or shutdown keeps dragging out. There'll be a test on this, on the legality of these, these tariffs. I can't imagine he basically has a majority there. He was very lucky to have a few people leave, the Supreme Court, and he was able to appoint them. So he probably has the upper hand there. I would be very surprised if they rule against him. But yeah, we're realistically, all of these catalysts are in the background. I think the only penny to drop really for this to have a bit of a pullback, it won't be fundamental. It'll be probably the technical signals either flattening or turning negative. So it really, we've had 25 different reasons for this thing to go down for months and months and months, and momentum has just smashed them all. So, we just need, probably the best thing you can watch is the momentum, and to see if those indicators are starting to turn overall. So which is kind of what we've got our eyes on. We're generally getting back to cash. We're 30 to 50%, probably closer to 50%. We've still got gold miners, and still, just reducing exposure overall. Not necessarily bearish. Again, because we're very much mindful of the moves like last night where we buy the dip. So and the fact that the fundamentals, I think, have probably the least amount of influence on a market that I've ever seen. So yeah, our market, SPI was up, I think, nearly 0.7%. We should get a couple of decent bounce backs. It was fairly negative, obviously, but just again, be wary of those technical indicators for the index. I would say that they will weigh. You're not going to get any momentum buying. It'll be very stock specific, but But have a great day. For those of you who watch AusBiz, tune into the call. I got the US stock edition today. A couple of pretty interesting stocks. But have a great day, and we'll speak again tomorrow.